Johannes from Central Valley Ag is our marketing analyst this week. We talked with Wade Wednesday afternoon about the chances for big crops, the outlook for ethanol, and how markets responded after Monday's reports.
Well, it's kind of an interesting report, Jeff, in that the numbers came out smaller than expected. And so we got that initial bump, and then on Tuesday we gave all that back and more in the corn market. Basically, there was a report in Reuters that said we don't buy the numbers, and the market responded by selling off in a big way. Now here on Wednesday, the market responded back. So basically, after all the up and down, we're back to square one where we started the week.
Once again, we're looking to see a big corn crop, and weather looks to be cooperating this year. It's forecast to be the biggest on record. If that would happen, if there's around 14, maybe a little bit shy of 14 billion bushels, what does that do for supply, and is there enough demand to kind of keep prices up?
Well, I think, as far as, percent sold, farmers are way behind compared to normal, just with all the things that happened in the last 12 months, and it's understandably so. The thing is that, even with a record crop, there's been a lot of storage added nationwide, so it will eventually balance out, but it might take a couple of months to kind of figure out where we're at. It should be really good for ethanol. It'll be interesting to see what happens with exports, if they come back right away or not. And then feed will definitely load up this fall on everything they can get their hands on.
Let's spend a minute more in ethanol. Gas prices are forecast to be down next year and the year after. With affordable corn, what does that do for the industry overall?
Well, the outlook for ethanol has to look really positive at this point, just with crude oil trading about $100 a barrel, and if we have corn around $4 this fall, should look really good here for the next 12 months.
You mentioned where farmers were on 2013. If you had any old crop corn left that you were probably gambling with at this point, what would be the advice?
Well, here just a couple of weeks ago, nationwide, there was a huge back off in terms of cash bids in corn, and it wasn't surprising that it happened, but the timing of it really was. I mean, it came in the end of July instead of the end of August when some people thought. And so, yeah, I mean, it's going to be very volatile between here and harvest. Everyone's just going to try to get by one day closer to $4 corn. So, I would say diversify, maybe divide it up into quarters and sell 25% a week just to kind of spread out your risk.
And then looking at 2013, where would you be at right now, and what numbers would you look at to try and sell it again?
Well, we've been pushing our guys to get up to half sold on new crop corn. We're actually a little bit beyond that. And so now with the market dropping back, we don't feel the pressure to make a sale or try to decide what to do. So we're comfortable sitting back a little bit and just waiting on making a next sale, maybe after we get out of harvest, December, January timeframe, figure out where we're at.
With the weather sticking around like it has, with cooler than normal, there is a little bit of a warm-up forecast here for the next week or two, but the weather concern that would usually play a part during the summer, certainly it did last summer, is that now maybe pushed off until a possible freeze as you look at corn and beans?
Yeah, that's one of the last bullish cards left in the deck. If we do get that early freeze for corn and for soybeans, I know that we are ahead of 2009 in terms of GDUs. So we're a little bit ahead of that year when we did get affected by that early frost. But that is probably going to affect soybeans just as much, because soybeans were planted mostly in June this year. So if we have just a normal freeze, yeah, it could play in on overall supply.
Right now, as it stands, this is forecast to be the third largest soybean crop on record. But the interesting thing is that what's happening down in Brazil, they're forecast to produce a huge crop this next year. What does that do for overall supply and possibly price as well?
Yeah, one private analyst this morning, I just read a newswire that said that they estimate that South America could produce 10% more than last year, and last year South America produced a record crop. So, that's probably the optimistic side of it, but yet, it's going to take a major issue if they're projecting higher than a record crop to bring things back to normal. So it should probably keep a lid on the soybean market worldwide here for the next 12 months.
Thoughts on if you have any old crop left, and then maybe looking at that new crop as well?
For soybeans, we actually had about a 50-60 cent bounce here since the report on Monday. So, if you haven't been making sales lately, if we can get a $12 cash for this fall, I would probably make another 10% sale. But still, diversify and spread out your risk.
Are you at all sold on 2014 corn or soybeans?
Yeah, we're sitting about 25% sold on corn, a little bit less on soybeans, but once again, just looking at locking in profit margin, and then by doing so, it takes a little bit more pressure off of when you make your next sale.